Shell PLC is a global energy company headquartered in the United Kingdom, engaged in the exploration, production, refining, and distribution of oil and gas. The company is also actively investing in renewable energy and sustainable practices to adapt to the changing energy landscape. Shell operates in numerous countries around the world, with a significant presence in key regions like North America, Europe, Africa, Asia, and Australia. The company's global reach allows it to maintain a strong market position in the oil and gas industry, while also expanding its footprint in emerging markets. Shell's strengths include global presence. Shell has an extensive global footprint, operating in over 70 countries. This widespread presence ensures the company's strong market position and ability to access diverse energy markets. For example, Shell's operations in North America include extensive exploration and production activities in the Gulf of Mexico, while in Europe, Shell is a leading supplier of fuels and lubricants. Financial strength. Shell consistently demonstrates robust financial performance, generating significant revenues from its diverse operations. In 2022, the company reported revenues of over $261 billion, highlighting its strong financial footing and capacity to invest in new ventures and technologies. Technological expertise. Shell is recognized for its advanced technology and expertise in exploration, production, and refining processes. The company has developed innovative technologies like the Shell Smart Energy Platform, which optimizes energy usage and reduces emissions in industrial processes. Renewable energy investments. Shell is increasingly investing in renewable energy and sustainability initiatives. For example, the company has committed to becoming a net zero emissions energy business by 2050 and has made significant investments in offshore wind projects and electric vehicle charging infrastructure. Shell's weaknesses include oil price dependency. Shell's profitability is heavily reliant on fluctuating oil prices. For instance, during the 2020 oil price crash, Shell's revenues and profitability were significantly impacted, leading to a temporary suspension of its dividend for the first time since World War II. Environmental concerns. Shell faces increasing scrutiny and regulatory pressures related to its environmental impact and sustainability practices. The company has been involved in legal challenges over its contribution to climate change, and activists have called for more aggressive action to reduce its carbon footprint. High capital expenditure. The oil and gas industry requires significant capital investment for exploration, production, and infrastructure development. For example, Shell's investment in the massive Prelude FLNG, floating liquefied natural gas project in Australia, involved billions of dollars in expenditure, which carries inherent financial risks. Shell's opportunities include energy transition. The global shift towards renewable energy presents Shell with opportunities to expand its investments in clean energy sources. The company is actively pursuing projects in solar, wind, and hydrogen energy, positioning itself to benefit from the growing demand for sustainable energy. Technological innovations. Advancements in technology and efficiency can drive operational improvements and cost reductions for Shell. For instance, the use of AI and machine learning in predictive maintenance and resource optimization can enhance the efficiency of Shell's operations. Emerging markets. Shell has opportunities to expand its operations in emerging markets with growing energy demands. For example, the company's recent investments in India and China aim to capture the rising energy needs in these rapidly developing economies. Shell's threats include volatile oil prices. Fluctuations in oil and gas prices can significantly impact Shell's revenue and profitability. For instance, geopolitical tensions, such as those in the Middle East, can lead to sudden spikes or drops in oil prices, affecting Shell's financial performance. Regulatory risks. Increasing environmental regulations and compliance requirements can raise operational costs for Shell. The European Union's tightening regulations on carbon emissions and the United States' focus on environmental policies pose potential challenges for Shell's operations. Energy transition. The global shift towards renewable energy and sustainable practices poses long-term challenges to traditional oil and gas businesses like Shell. The company must balance its legacy fossil fuel operations with its growing investments in clean energy to remain competitive in the evolving energy landscape. In conclusion, Shell's global presence and technological expertise provide a strong foundation for its operations in the energy sector. To sustain its competitive advantage, the company should continue investing in renewable energy, leverage technological innovations, and proactively manage risks associated with oil price volatility and regulatory pressures. By doing so, Shell can navigate the challenges of the energy transition and position itself for long-term success in a rapidly changing industry.